Hi, Jonathan York, Bay Financial Partners, looking at investment markets. So Trump has now seen his first 100 days in office. Despite the false narrative he was pushing at the rally yesterday to celebrate it, saying it's the best first 100 days for any president ever in the US. But his approval rating would certainly disagree. It's one of the lowest approval ratings ever. It's 12 points below Joe Biden and some 20 points below Obama and George W. The only one who got close to these sort of levels was Trump himself in 2016. And it's really just a false narrative he keeps pushing. On the trade deals, he says there's over 200 countries looking to do a deal. There's only 195 countries. And even some in the US are now saying, we've got a constitutional crisis, as he's really going after the judicial arm and really just pushing back on anyone who sort of criticizes him or has a view against his views. And a further indication of this was this morning with the GDP data that came out at negative 0.3 for the quarter. Trump's blaming Biden. Now this is for the first quarter, which is from January to March, when he was in power. Indeed, since his inauguration, the S&P has fallen around 8%. But again, he's blaming Biden, saying he took over a lousy economy and a poor stock market. And the implications, if he keeps pushing this false narrative, the US dollar is a reserve currency, and if people start to lose faith in the and sort of confidence in the US, then potentially the US is in serious trouble. Indeed, earlier this week, Amazon was looking at posting the prices on its sort of website, and also the increased prices due to the tariffs. Now, as soon as the White House got wind of this, there was frantic phone calls, and Trump was very upset. But indeed, on the tariffs, he's just trying to find a way to sort of back out without admitting he's wrong, because now he's making some concessions for auto industry, and it's just really quite interesting because despite all the talk about deals being done and countries calling them to make a deal, none have been announced. And all the time the clock is ticking before those tariffs start to kick in. Now with a weaker economy in the US, sort of rates are falling a little bit. 10-year is back at 416 and the 2-year is back at 362. But again, it could be hard for the Fed to cut rates if inflation is rising, which it looks like it will do if Trump implements his tariff policy. Prices will rise with tariffs. Now, in the Russian-Ukraine war, Putin has come out and announced a 3-day ceasefire while he celebrates a big sort of military parade in Russia to celebrate the ending of the Second World War and their victory over Germany. But interestingly, Trump has actually come out now and sort of criticised Putin for pretty much the first time. And an interesting comment as well, he sort of came out and said, maybe Putin's just stringing him along. Because at present it seems that Putin and Russia have no inclination of ending this war. And indeed, if a deal is done, it looks like Trump is going to be quite happy to give up the land that Russia already has, and that includes Crimea. Now, after that negative GDP data, it's going to be very interesting to see earnings and the guidance given this week. You've got a big week of earnings this week in the US, and it's going to be very interesting to see the guidance. Now, another dent to Trump's policies, the drill baby drill is not really working because oil has fallen back well below $60 now at 58.20 and change. Now that's around $6 to $7 below break even for a lot of the shale companies in the US. So they're hardly going to be drilling and taking oil out of the ground when it's costing them $6 or $7. Now the UK economy is just sort of still stumbling along really, and really needs some impetus and some sort of help. And hopefully the Bank of England will come to the party and cut rates at its next meeting. Now, the EU region, quite interesting. German inflation was well below expectations, came in at 2.2. So that's sort of encouraging. And, potentially the ECB still looking at a further rate cut at its next meeting as well. Although obviously, same with the UK, really waiting to see what the impact will be of the Trump tariff policies. Whether they'll be enforced, relaxed, no one really knows at present. And that makes it very hard to formulate any sort of policy. Now in Australia, you've got the election this weekend, and again, Albanese seems to be sort of creeping ahead in the polls. He's got around a sort of a 3 to 4 point lead now, whereas a couple of weeks ago, it's pretty much neck and neck. And again, with the Australian economy, inflation is falling. You've got an economy that is sort of pushing along at an okay rate, but could do with a little bit of a push. And potentially May the 20th should see another rate cut from the Reserve Bank. Now here in New Zealand, the sort of pre-budget speech from Nicola Willis, the finance minister, was not sort of grave, but no lolly scramble in this budget. There's very little to give away, and it's just going to be pretty tight. Which again is what most sort of people sort of expected. But again, given the economy is still sort of struggling and needs sort of help, we expect the Reserve Bank to cut interest rates by another quarter point at its next meeting in May. And while that's obviously good for mortgage holders out there in the housing market, it will have a negative impact on savers as TD rates will fall. Potentially now for a 1 year term deposit, you could be looking at just around 3% after tax. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.